Hey guys, and welcome to the Working Money Channel. This from XRP Crypto Wolf. Coinbase says 10 of the top 100 hedge funds by assets under management are among their clientele. So that's big because this just speaks to the cryptocurrency market growing and growing, more institutional money. So let me get into this. The list of hedge funds breaking into the crypto market continues to grow, and it appears that Coinbase is winning a significant share of their business according to the company's second quarter earnings release. Coinbase, which operates an array of business lines that cover both institutional and retail clients, reported $2 billion in net revenue for the second quarter of the year, smashing Wall Street's expectations. The company also appears to be cozying up to the hedge fund world. Coinbase said Tuesday that 10 out of the top 100 hedge funds by assets under management are customers of the exchange. So that just speaks volumes to institutional money's interest in cryptocurrency, which also is going to bring me to what we're going to talk about a little later here with regards to XRP price, where we're going to see it going now. I mean, we have seen significant movement for XRP since about July 20th, when we finally bottomed out and around here, retracing into this support level. I'm going to talk about this in a second, but we do have to kind of understand what is going on with the entire industry, where we are as a whole, and how this is going to continue down the road. So here's a quote. Adoption continued at a rapid pace throughout the quarter despite market volatility. Coinbase said, "We are encouraged by the progress we made over the past year as we build our institutional suite of products and service offerings." So 10 out of the top 100 hedge funds are customers of Coinbase. That says a lot, and I wouldn't be surprised by next year if we were up to 40%. Now, who knows? I'm sure some of these hedge funds are also clients of other crypto exchanges. But, the fact that Coinbase says they have 10 out of 100, that is already 10%, and we still haven't gotten going yet. So the other thing that I wanted to mention about Coinbase, they have removed back by US dollars that claim from the USDC stablecoin, something that I think we should be paying attention to. USDC, Circle's dollar peg stablecoin, seemingly lost one of its biggest competitive advantages to its rival Tether because major crypto exchange Coinbase made an important change on the USDC coin page on its website following an audit which revealed that not all of USDC's reserves were held in cash. This ran contrary to the previous statement that each USDC is backed by $1 held in a bank account. Coinbase visitors are now greeted with a new statement that says USDC is fully backed by reserved assets when they enter the USDC webpage. So here's the page here. Before it used to say this, backed by US dollars, each USDC is backed by $1, which is held in a bank account. Now it says this, backed by fully reserved assets, each USDC is backed by $1 of asset with equivalent fair value, which is held in accounts with US regulated financial institutions. So an interesting change of events considering we originally thought USDC was the more safe stable coin compared to Tether. I'm sure in a lot of ways that still reigns true, but it is interesting to note that even USDC isn't fully backed by US dollars in an account. Things that make you go, All right, I'm going to keep moving though, guys. This from Noreen Havez. For all you Algorand hodlers here, I wanted to mention this. Algorand is excited to be working with Capgemini Financial Services team to introduce our unique PPOS blockchain technology to more future Fi projects, transforming industries and uncovering opportunities. Looking forward to this important collaboration. So more development for the Algorand ecosystem here, and for those of you guys who do not know what Capgemini is, a little bit here on that. Blockchain solutions for banking and financial services. Blockchain is a game changer in the industry, and no financial services firm can afford to ignore it. This coming from Anirban Bose, global head of banking and financial services. Blockchain distributed ledger architect has the potential to enhance security, speed, and operational efficiency for banks in several business areas such as payments, asset management, loyalty, and loans. So this just giving a bit of a description of what that is. Capgemini, though, has invested in people, technology, and processes to understand how blockchain can be used in core financial functions. We are already consulting with several major banking institutions and regulators to assess and implement a range of blockchain-related solutions across retail banking, commercial banking, and global markets. We provide a range of consulting and technology service, including feasibility studies, business case assessments, operating model design, advisory services on system architecture, and full-scale system integration. Specific services include, and then they list some of their services there. So now these guys, Capgemini, working with Algorand, as per Noreen's tweet here. So this is great news. I know some of you guys in the XRP community are also very active in some other cryptocurrency communities, some specific ones that are closely related to Ripple and XRP. Some are not. Nevertheless, it's going to be those coins that serve a purpose, that solve a problem, that are really going to be the ones that hold value down the road. So I thought I'd bring this to you guys. On top of this piece of news as well, brought to us by crypto_dash here on Twitter. This is big, and so I thought I'd touch on this. Hackers steal over $600 million, the biggest in DeFi history. So all the kinks still aren't worked out. To continue with centralized finance or traditional finance, I'm not saying that that's how the world should continue. DeFi still obviously very new. And so anyway, let me read you guys some of this. Hackers stole more than $600 million from interoperability protocol Poly Network in the largest decentralized finance security breach in history. And so there's just a tweet to that effect there. The hackers exploited Poly Network on DeFi exchange Polygon, Ethereum, and Binance Smart Chains. Assets stolen included $253 million in Binance Smart Chain, $266 million in Ethereum, and $85 million in USDC on the Polygon network at the time of publication. Poly Network is a cross-chain protocol for swapping tokens across various blockchains. The founder of the Chinese blockchain project NEO launched Poly Network in partnership with Ontology and Switch.io. Poly Network has asked digital asset exchanges and miners to block any tokens coming from the above addresses. The team behind the protocol also promised legal action and requested that hackers return stolen assets. Can you please return them? Please, pretty please, with sugar on top. Tether froze more than $30 million in response to hackers. Tether Chief Technology Officer Paul Adroino tweeted, about an hour following Poly Network's announcement of the hack, the perpetrator attempted to move stolen assets through the Ethereum asset into Curve.fi, but the transaction was blocked. The hackers continued trying for about 20 to 30 minutes before an anonymous user sent the hackers a message on blockchain that USD Tether had been blocked. And so just more information to that. $600 million. That is not chump change. And the fact that hackers are, able to do this even on DeFi networks, the security part of this has to be better. And I feel like, this is still the Wild West in a lot of ways. And this is just another good example as to why I think governments are still fairly reluctant to just kind of jump on board and feel entirely confident that this new and emerging blockchain cryptocurrency industry can keep them secure, can keep their clients secure. So it's stories like these that kind of maybe put cryptocurrency a few steps back in the government's eyes. However, we are still making waves. It is still overall looking positive, and these are just, certain examples, specific kinks, bumps in the road that we kind of have to move past. These are hackers attacking the Poly Network DeFi exchange to take money, and sure enough, they did succeed. The fact of the matter remains, DeFi is supposed to be that solution for institutional money, and look at this, they still got hacked, which always just brings me back to this thing of keep your cryptocurrency safe. It is important to keep your crypto in cold storage. Me personally, I use a Ledger Nano. I do have an affiliate link if you guys are interested in one of those. I have it in the description of the video. You can use it if you want. You don't have to use it if you don't want to. But again, guys, hackers are getting more sophisticated when it comes to cryptocurrency hacks. So, the exchanges, they were a big target back in 2017. And even now, we are still seeing hacks happen on exchanges. But these bigger hacks, $600 million over a DeFi network. That's getting, in my eyes, even more sophisticated, even more technical. So not your keys, not your crypto. Just remember that. But like I said, this really isn't stopping the traditional finance industry getting into crypto. We're just seeing it slowly but surely. So the fifth biggest bank in the US is planning to launch a crypto service for their clients. This is coming from Lark Davis here on Twitter. And this is PNC Bank. Another one that relates to Coinbase. So Coinbase said Tuesday it's working with PNC Bank, the fifth largest bank in the U.S., on a previously undisclosed crypto project. In recent months, we have formed partnerships with industry leaders, including Elon Musk, PNC Bank, SpaceX, Tesla, Third Point LLC, and Wisdom Tree Investments. Tuesday's shareholder letter read. So a source had previously told CoinDesk that PNC Bank is expected to unveil a crypto John in the coming quarters. The service would give the Pennsylvania-based national bank more seamless access to cryptocurrency investment for its clients. It's just one facet of PNC's broader digital assets and blockchain strategy. So boom, another major US bank jumping into crypto. PNC is the latest mainstream mega bank to dip its toe into digital assets, and perhaps the largest to do so with Coinbase, the industry's biggest name. PNC is already plotting a more crypto-centric future, and months ago began hunting for a hire to lead its innovation push. So PNC Bank taking this very seriously and teaming up with Coinbase there to provide crypto custody or cryptocurrency investment opportunities for their clients. We know money's flowing into this space, right? We heard at the top of this video, Coinbase teaming up with 10 of the top 100 hedge funds by assets under management. And, this is just getting bigger and bigger. Earlier this year, Coinbase even did launch an IPO. So these are all signs pointing to the fact that big money is coming in. We have the market rallying right now. It has been rallying for about 3 weeks, I'd say, since about July. So XRP breached 90 cents. Last night. Where can we expect it to go next? How can we expect price to move? And are there any patterns we should be paying attention to? Well, I wanted to take a moment to just look at the XRP chart here, guys. One of the things that I wanted to bring to your attention was this fractal pattern. Now, I know we've been talking about this for a while. Ever since we saw this pattern kind of start to take shape, ever since that decline from about $1.96 earlier this year, back in April, we've been taking a look at this pattern, and we were trying to kind of see if we could see anything similar to what we've seen in the past. And what I've done is I've taken this fractal pattern and superimposed it on here just to kind of give you guys a sense of the pattern and how similar it looks. Now, the levels are not identical. I mean, I'm going to start off by saying that the bottom on the fractal obviously bottoms out there. Obviously, this pattern bottoms out here. So there is a differential there, considering we have lined up the tops up here. So, but if you look at the pattern and you just take a look at the structure of it, we are seeing a lot of similarities. Okay, so we have this top up here, right? Came right back down. It's all matching up quite nicely here, back down here, then back up here. Okay, and then we really saw this drop here, which did in fact line up with this at the time. But then this pattern here in 2021 continued its way down and found its way down here. So not entirely similar, but you guys can see the structure is still relatively the same. We had the double bounce, so bounce, bounce, now making its way back up. And today in 2021, bounce, bounce, right? Boom, now making its way back up and out of there. So if I were to just kind of take this down, and I'm going to just bring this down here and just kind of get rid of some of this just to kind of keep it, or actually no, I don't have to get rid of that. So let me just draw that on here again though. Here, these two bottoms, bounce, bounce, and then it came right back up out of here. This is what we are now seeing today. And so let's not forget, guys, if I bring this right back up here, and, we take a look at where we saw XRP go after this. At this point here, once we saw this momentum build up, here, let me put it back over here, and we saw that Nike swoosh pattern form. This is what I feel like we're forming right now, this Nike swoosh pattern. Let me just get rid of that. After that buildup of extreme demand, that is when we saw XRP really just kind of shoot up to here. Now, if we were to give a target based on this old fractal pattern, I've done this in the past, but just to kind of reiterate here, that would bring us to an XRP price of about $14 or so, $14.27. All right, let me just bring us back down here. So what are we to expect next? This is a very, very good question. I'm going to throw a Fibonacci on here. Let me just bring that down a little. Throw a Fibonacci on here, and it's difficult to say because I'm putting the Fibonacci on the fractal pattern here. We can see that these levels have indeed retraced. So the 0.5, based on this low here, we saw the fractal go back down under the 0.236, then came back up to the 0.5, retraced back down in and around here to the 0.236, back up to the 0.5, back down again before it really just shot up into orbit. So I'm just going to clear everything off there and throw a Fibonacci back on here. What can we expect if we were to see those same levels form? Now again, this structure did dip down a little lower. Nevertheless, we could still see XRP price retrace to these Fibonacci levels. So the 0.5, which would mean XRP's next target $1.24, $1.25, give or take. So if we were to see something similar, and the reason I say this, the reason I say why we could still see the 0.5, despite the fact that these movements were way more volatile, we saw much more in terms of price depreciation for XRP at this point in time. Something I want to remind you guys is that look at the volatility here. Let me zoom out for a second. Look at how much volume there was for XRP in 2021, right over here, okay, compared to 2017, right over here. You guys can see that. I'm just going to get the cursor out of the way so you guys can see that the volume in 2021 is a lot more than it was in 2017. So I'm not surprised that we are seeing wider swings and with the same velocity that it did go down. So despite the fact that we did see a wild swing to the downside, deeper cut than we did see in 2017, I do truly believe that we will see the same to the upside. So the 0.5 Fibonacci retracement, I think, is not out of the question. Next target here, $1.23, $1.24, give or take. What we would see from there is finally, maybe more of this before XRP really does take off to the upside to those targets that we've been waiting for, anywhere between $10 to $15, give or take. So we could see some bouncing around, right? This is a significant level. So, if we see XRP go back to the 85-cent mark and kind of hover there several times throughout this next rally, I would not be surprised. If it bounces off $1.24, $1.25 at the 0.5, I would not be surprised either. And for timing, everybody wants a time frame on how long this is going to take. Just looking at this, zoomed out once again, I'm going to take this fractal again because I just did delete it. So I'm going to take this fractal, put it back on here, and I don't like to predict time because timing, there's a lot involved with timing. Much of it is what's going on right now with regulatory clarity, the news narrative, anything could change at a moment's notice. And so even if we were to just take this and look at it from a time perspective from back in 2017, the thing I do want to point out is the fact that this fractal is matching up more closely time-wise than it is level-wise, which I find interesting. We're seeing these dips happen at the same time, a dip here roughly, give or take, at the same time. Now we're seeing this rally to the upside. We're seeing this rally to the upside. So if we were to take this fractal pattern, of course, we have that time frame of Q4 2021. We don't know what's going to happen with the XRP lawsuit, but all things considered, right? We are still seeing similarities in this timeline. Even if you just look at this is just off by how many days? About 9 days from the fractal pattern to the 2021 pattern. And this one here, how many days is that off? It's only off about 3 days. So time-wise, it's looking like we are very, very close, only off by about a week or so in some of these cases. I guess the question remains, is this pattern going to continue mimicking the time that it took in 2017? And if that is the case, will we see XRP moon by November of 2021? Be prepared, guys, to see fluctuations anywhere between $1.24 back to 85 cents a few times before this happens. Of course, that Nike swoosh pattern, we're in the midst of making it. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.